If you're struggling to find reliable entry and exit points in the Forex market, supply and demand zones might be the missing link. In the next 5 minutes, I'm going to explain what supply and demand zones are, why they work, and how to use them to improve your trading strategy. So let's get right into it. Supply and demand zones represent areas where institutional traders, also known as smart money, place their huge buy or sell orders. These zones are created by imbalances between buyers and sellers, leading to very strong price reactions. Demand zones are areas where prices previously found strong buying interest, which often leads to a bullish impulse in price. And supply zones are areas where prices previously found strong selling interest, which normally leads to a strong bearish move in the market. And that often leads to a strong momentum move in a certain direction. What usually happens is the market revisits these zones again. And that happens because institutional traders re-enter again and again with large positions in the market. Your job as a retail trader is to spot these zones and trade the reaction off of them. Now here is a demand zone example on euro dollar. Like I said, using these areas for your entries, they'll give you very precise entries because we can clearly see that at those levels we've got strong market reactions. And in order to get such a bullish or bearish impulse in the market, a massive move as you can see on my chart, you need a lot of volume. So that's where those big institutions open their trades. Now we also know the next time the market pulls back to this area, we're probably going to be expecting the same reaction again. Because if they were happy to buy this asset at this price in the past, the next time the market comes back to that same level, they're probably going to buy again. So all we need to do is to find out how to trade it. Now there's a few options depending on what kind of trading style you've got, but you can also use pending orders if you wish, placing your stop loss just below the demand zone, below this previous structure, and take profit can go at previous highs or even higher depending on price action. So all we need to do now is to wait for price to tap into this area, and as you can see, we've got a strong and sharp move to the upside again, just confirming how well those areas actually work. So here is the chart on dollar yen, and we can clearly see that we're moving in a downtrend. Now this is the 1 hour time frame. I'm going to show you another way how to find entries from these zones. So the last impulse happened right here, and I'm going to place a rectangle tool right across the bullish candle because this is the last bullish candle before the bearish move, and I'm going to select this as my supply zone. Now all we want to see is a pullback to our zone, and as soon as we see that a pullback is coming up, we're going to drop down to a 15-minute time frame and try and refine our zone. So here is the last bullish candle before this bearish impulse. So right here is my supply zone. Like I said, you can also use pending orders if you're happy with that, but if you want to have not such an aggressive entry and instead of that you're waiting for extra confirmation, what you can do is you can wait for price to pull back within this zone and it can drop down to an even lower time frame. Okay, so using multiple time frames will give you an even better entry, a more precise entry as well. So we're looking at the next move to the downside, and I've already got my next supply zone within this market structure that we just saw on the 1 hour time frame. So I now have a couple of supply zones, and I'm going to be waiting for a pullback here on the 5-minute time frame where I'm going to be looking for selling opportunities. So we're going to place our pending order. Stop loss can either go above the zone or at least above this market structure right here, and I'm going to be looking for targets all the way down here at previous lows. So as you can see, over 1 to 5 on this setup. And the next thing we see is a strong, massive market reaction again from our supply zone. So this is how you find the best entries in the market. Mastering supply and demand zones can really improve your timing in the market and help you catch big significant moves as well. If you found this video helpful, make sure to subscribe to this channel because there's information like this coming out every single week. Also, don't forget to check out all the links below this video and join our free Telegram channel as well. I'll see you there.